You on Jfin. This one was an absolute monster today. There's a lot of opportunities to get in and out of this thing or hold through the entire move because this thing held its trend line throughout the majority of its major move. There really wasn't much else to trade today. I think there was Exper, and that was about it. But this stock went parabolic, and luckily I got to see it at the beginning of its move. Popped up on my unusual volume watch list, and I love this watch list because it always changes as the unusual volume pops up. It's kind of like Pepper or trade views, which is really nice because it's pretty accurate, honestly, and it's nice to just be able to type this in without having to do like just click this here and it'll pop up. So either way, this thing popped up. I saw it like up in here, I think, and so I was looking for a nice dip buy, probably halfway down this move or so. Immediately you can kind of put in that was the first kind of move, no real volume, so it's not, I don't expect it to use that line as support very much, but it could use it potentially. Either way, usually you're not going to be able to get a lower trend line in place on the first dip, which makes it a little more difficult to dip buy these things. However, wherever it feels that it's going to find support is wherever it's going to break this wedge. So as soon as this downtrend started, it tried to break back up. I entered actually right through here. I entered it up in here for this dip down to VWAP, see if it could hold it. It didn't hold, sold out, took a very small loss there, and it came back down to here. And before I even did this, I went to the daily to try to find some resistance lines for some price targets that was besides the previous high. And you go to the yearly, and there's really nothing except for like 6.8 way down in here. Maybe you could do, I don't know, I don't even know what the price is at, but it got denied there. Denied here, but really anything above like this whole level, it had so much room because there wasn't much resistance on that level. We could go to the weekly, maybe look for, I don't know, I didn't think this would go past, at the time I didn't think this would go back past 13, so when in doubt, if you don't have time to put in price targets, you can always just go by the $0.50, usually a good mark, or whatever the most recent one is. So there was really nothing to stop this thing between here and here. So that's why I thought it was so amazing. And look, look how perfect that is. 729 on the yearly. I mean, it's just so simple. Look, 681, 729 came from right here. So see how it perfectly bounced off that level? That's just a simple level that you could have put in place on the daily, right? And so it finds support there. And you're like, okay, I got my resistance lines, or my support and resistance lines on the daily. First thing you want to do, waterfall, find your support and resistance lines, find your trend lines, and then go off of there. And look, it perfectly bounces off that level, turns around. At this point, I'm not going to be buying the dip because it's below VWAP, but I will potentially add some for this reversal up to VWAP. So your first add would ideally be right here. And notice the volume at the pivot point. It's always good right before it pivots. It's going to have, it's going to have some very low volume. Look, pivot point always has very low volume. So pivot, boom, that's what you want to see. So now throughout the rest of this move, you want to see the volume come below average on every move before it. The volume comes down to below average. Look, pivot, below average. I literally use this average volume line for most of my plays because it adapts to the current volume in the entire stock. So as this increases on volume, you're still going to get that same kind of limit. It might be more volume than the previous time, but it's relative to the previous moves. That's why it's so helpful. So, I mean, you can go to anyone. Let's go to, really quickly, let's just go look at Exper. So Exper made a move today, made a really parabolic move. We could look at any of these. So, I mean, it didn't really pick up volume until here. Look right here, pivot point, no volume, pivot point, no volume. This is all just technical. It's just so simple. Down here, I don't think this would have been a dip buy, but it comes down on volume. I think that's still all one move. You want to see it reconsolidate, maybe pivot, boom, pivot right here. Didn't really get that volume back in, but you get the idea that like it's super low volume before it even pitched back up over that one. Yeah, what else did we have? Any that was like, oh, here, this is probably a good example. Look, pivot point, boom, right there. Pivot point right here. Low volume. Buyers aren't going to come in until this volume is gone. So just always, with any move like this, that's the easiest indicator for me, especially, is like if you see that doing that in any move, you should start considering getting in. You know, you want it, but the thing is as soon as you get in, you want to see on the next one or two candles, you want to see that volume come back in if you're confirmed at a bottom. So entry would have been on this anomaly candle, which isn't moving. Not anomaly, but confirmed with a little small hammer. Boom, you're in 6-7. You're looking for this. You know, you're looking for your first price target is always this. Conservatively, this would be your first price target. And it comes down, boom, puts in a lower. Now this becomes support, right? So now you can draw a trend line from here to here off of that. And whoa, look how it holds support all the way through here. This happens over and over again. Once you get the technical analysis down and you are able to make these plays on a dime, really the only thing that you have to battle, if you do have to battle, is your position sizing. Not freaking out over how much you're spending or how much your position size is. So not being like, okay, I'm risking a ton. It's really just about eliminating emotions from there. It's like the psychological battle. And for that, I recommend reading Trading in the Zone by Mark Douglas. It really, really helps with helping you relate to the psychological problems with trading, whether it be not having enough confidence to enter, exit trades. You could have an entire plan like I did here. Look, you could have a plan that you're going to get in here and your first price target is going to be 882, but you have a stop in place and you know your risk, but you can't accept the fact that probably around 50% of the time you're going to take losses. And if you can't accept that, then you're going to be freaking out, and in the trade you're going to be thinking, oh my god, like what do I do for this to like you basically, when you're thinking I don't want to take a loss or I don't want to be a loser, I don't want to be wrong, the entire move that you're in after you buy in, if you do even buy in, is going to be like, okay, give me a reason to get out, right? Like I want to give myself a reason to get out, which is a horrible mindset. You should be thinking, get to the PT, and like if you have a reason to get out, then you should get out. But if this thing, you put in your trend line and it holds that trend line and VWAP when it comes back up, and it dips down below, but it holds this trend line. At this point, you can move your stop to 764 or so, which was your entry. So you're not risking anything. Like, it's just really important once you get in the trade to be like, okay, I know my risk. My risk is I got in at 676 zone area. Your risk is going to be below this candle, so 734s or so. You're risking 20 cents for what is that? $1. You're risking 20 cents for $1. 10-2 ratio, 5-1 ratio. That's very good. So if you know all these things beforehand, putting in that stop should relieve that stress of you being wrong. Because if your first price target's up here and has a natural reaction in there, but it doesn't break down, it's going to get there, you know? And if it doesn't, it's the stock's fault. And maybe even if it comes back up and down, now at this point, if it doesn't hold your entry, which would now be support for this very small move right here, like that would now act as your support, then you get out. You get out for either a very small loss or nothing, because now the stocks couldn't break this level and is now going to go downwards, down this way, and now it's going to have to draw in one of these. Like if this didn't break up, this now becomes a short, right through here. Now it's got to break that line to get up through if it doesn't break it. Now if it doesn't break this line, it's going to be a short, but it did. It broke up. Your stop's here so that when the shorts come in, you're out. This is just a quick lesson on that. So it pops up. It's your first price target. It's a slow ass day. So I'm taking a lot of profits off here at $1. Are you kidding me? Next price target's here on the daily at 10.5s. So maybe you hold some for this larger move. Hold it just to hold this trend line. So at this point, you trim some up here, and now your risk is as it moves further over and over, you got this is where see this I can't really draw it out, but wherever my cursor is, that is your stop loss. So as it moves right here, your stop would be here. It slowly moves up and up and up and up. And now you're like, okay, my stop is below here. Maybe if you're risky, you want to try to take view up, but at this point, you don't want to break that trend line. Doesn't break the trend line, pops back up. Now it's at 9.6s. Okay, it's at 9.6s from your 7.6s entry. All right, that's another whole $1. Okay, so maybe you took a good portion off here. Now you're like, oh my God, this thing's popping back up. My next target's 10.5. Okay, this thing holds the trend line, keeps going up and up and up and up, and then finally gets to 10.5s, and look, it finds some resistance up in there in that zone, but then holds again and then keeps going. So if you miss this first move down here, you could have gotten in here. You could have gotten in here. You could have gotten in here. There's many opportunities on this. And if you got in on this first move and you held through this entire thing to at least 10.5s, bravo, you just made, 20% or something like that. Great job. It's all about entering when you got a thesis. You got your resistance lines. Just really respect, if you know good technical analysis, respect your plan. That's the trader psychology. You gotta have confidence. You gotta have confidence that this thing could get up here or it could fall out through here, but as long as you just move that stop up, you have nothing to worry about. So once it gets through here, conservatively, you could have trimmed, and then you could have trimmed up here. You could have gotten back in down here and trimmed up here, or you could have held through this whole move all the way up because it didn't even break this trend line. And that's a conservative stop right there. It could have broken down here, consolidated, and then gone again, but it didn't even break that. It's just such a crazy move. It's a parabolic move, and these happen weekly, whether it be once a week or twice a week or whatever. You can capitalize on these and get these highs. So if you were to be holding through here, once you got to 10s, that would be your bigger scale. But to see that this thing didn't even break down and got bought up at these levels is so bullish and just insane that you're hoping that you still have shares. I wouldn't add here, obviously, because it's way up and it could just fall back in. But at this point, when it gets this high and I couldn't find real resistance on the daily or the weekly, now you just want to go buy either dollar amounts or $half amounts. So as you can see, like at the $half amount, once it gets above here, you're like, all right, now maybe 11.5s would be a nice trim zone. Boom, finds resistance through there. And then 12.5s, boom, finds resistance in there. And then 13.5s, boom, finds resistance in there, can't break, double top, and then gets the death candle. And then at this point, you're like, all right, I don't like to trade the backside of the trade very much because it's not going to give me the gains that the front side does. You might try to dip for a reversal, but that's really not going to be very profitable, and it's not, trade with the trend. So, but it held up, so this could run tomorrow too. After hours look good, so we'll see what happens.